Hi, today what I wanted to talk about is refinancing. We are starting to get more and more inquiries on refinancing as rates continue to inch their way down. They're not quite as low as what I'm sure everybody would like to see, but they are definitely improving. And so today what I want to talk about are some key questions that you can be thinking about when you're looking to refinance. Because it's not always about necessarily lowering the rate and lowering the payment, although that's typically the most common reason people refinance is to lower their overall cash flow each month. And so therefore they want to get a little bit lower rate and a lower payment. And as I've discussed in the past, when you do that, what you want to do is also make sure you're factoring in any of the closing costs and seeing how long it's going to take you to recover those closing costs. Obviously, you may want to look at something that you're going to be able to recover fairly quickly. Typically, less than a year is ideal, especially given the fact that perhaps next spring, next summer, maybe rates will be even lower. And if that's the case, you could potentially even refinance again, as long as those costs aren't too much. But in addition to that, here are some additional questions that you might want to consider. As many people will already know, by going to a 15-year term, it's not necessarily going to save you per month. In fact, in many cases, your payment may actually go up. But because of the lower term and typically a slightly better interest rate on a 15-year versus a 30, you can actually save thousands of dollars in terms of your overall finance charge over the life of the loan. And so many people will also look into doing, say, a 15-year or perhaps maybe a 20-year. Maybe you can't go all the way to 15, but maybe you go to 20. So that's another reason to look at refinancing. Additionally, you might be in a situation where you need some cash out. In other words, maybe you've got some credit card bills or some personal loan debt, things that maybe are much higher interest rate, and you want to get rid of those and save your cash flow that way. Depending upon what your interest rate is on your first mortgage, we may look at doing a complete refinance where we pay off your first mortgage, advance you the additional funds to pay off those other debts. Or what we might do is say, you know what, your interest rate you have on your first, let's leave that alone. But because you've got enough equity, let's look at either like a home equity line of credit or a home equity loan where it's a fixed rate, fixed term, that type of thing. So if you need cash out, that's another reason to consider refinancing. Additionally, you might have, say, an FHA loan and you've been in the home long enough, you've paid it down, you've seen some appreciation, and so now maybe even if you've got a somewhat decent interest rate, you're also at a point where you have at least 20% equity. The only way to get rid of the mortgage insurance that you're paying on an FHA loan is through a refinance. And so many times we'll have clients approach us and want to discuss that. And we can look at those numbers as well and see, does it make sense if we can eliminate the mortgage insurance you're paying, even if the rest of the loan and the rest of the payment, if you will, stays the same, maybe the rate is very similar, but you save on that monthly mortgage insurance, that sometimes is enough to make it worthwhile to refinance as well. So again, as rates continue to improve here, refinancing is becoming more and more popular. We're getting more inquiries on it. And so I just wanted to kind of share some of these additional things for you to consider when you're looking to refinance. And so if you have additional questions on that, please don't hesitate to reach out, give us a call, text us. Typically what we do is when you call in and look to refinance, one of the first things we're going to ask you for is a copy of your mortgage statement so we can see what your interest rate is, what your balance is, so we can calculate a payoff, start putting some numbers together so that we can see what is the best course of action for you, how can we save you money best, whether that be long-term, shortening up the term, or short-term, saving your your monthly payment each month, as well as obviously saving some interest because we want to put you into a lower interest rate, obviously. Okay, again, hope you found this information very helpful. If you have any other questions, don't hesitate to call or text. We're always here to help. We look forward to hearing from you soon. You have a great day. We'll talk to you soon. Bye-bye.